Good afternoon, and welcome to the daily wrap up here with ForexAnalytix. And let's just move this out of the way. And we've seen gold make another run up again. There's a few comments that have come down with Mnuchin saying that dollar policy is basically it's okay or it's standing for now. And I think that's raised some concerns that we could see something develop, not now, but there's that risk going forward. And I think it's kind of put the dollar in a position. You're not seeing a dramatic movement now, but certainly that's opening up the risk going forward. I think in the next few weeks or month or so, I think probably one thing that probably was going to upset the administration was the revamp by the ECB. That's where we dropped real quickly on the euro this morning. They're looking at a revamp of what their inflation thought process, or whatever you want to call it. Anyway, the point being is that they could potentially you'd see even more stimulus. Actually, drop the euro down. We're kind of coming back a little bit as the dollar has sagged, but I think the administration, specifically Trump, is really ticked off, feeling these countries are devaluing their currency. I just saw right now, not just now, about an hour ago, that I think it was Kuroda with the BOJ was saying, hey, they're going to keep on doing whatever they have to go and do. So I mean, that was just like a little over an hour ago. So what I think at that point, it's the administration may just come in. The U.S. has always had what they call the strong dollar policy. Really started out in the early 90s, when Rubin made that case. And from there, it's always been the thought that, the administration will always defend a strong dollar, or that's in their best interest, a strong dollar. But I know that, as we are aware, is that the dollar has been, strong for quite some time, not ridiculously strong, but has been strong. But, while other currencies, they've done everything they can to go on and weaken their currencies, specifically the euro, the Japanese yen. And obviously that's got Trump fumed up. And so with the ECB, coming in and adding more fuel to the fire after, just a few weeks ago, they're talking about, additional stimulus. Draghi was making that reference. Well, here we go and adding again. And that's, I think at this point, then you have to be concerned about that the administration may do something. They say the policy of the dollar policy is the same for now. And that's a key thing for now. So that's a risk going forward. And really, I think that's also, you're seeing that play in a little bit with the gold market too, although the silver has certainly made a pretty good run up in here. If we take a look here, this gold it's been all over the place in a sense. I'm saying is when it looked like it was going to go in and slide back, and then look at silver just continue to mount. And it's just like on a nonstop train. I mean, you look here, you can think here on a very short-term basis, the wick isn't very long, but you might have like a hanging man here. So the market did pair off, not even that much, about maybe, about 10 cents maybe. And here we are reasserting itself again. I think a lot of it has to do with the S&Ps. Sure, we don't have to cut to the S&Ps for a chart to see that looks like it could go on and slide. I mean, they've been waiting here for this rate cut, and it's baked in the cake, 25 basis points, but it doesn't look like we're going to get any 50 basis point. And I think that the market's just getting a little bit tired at this point, and the China news doesn't seem to be fixing itself. And so who's going to be left holding the bag up there? And I think that's part of the reason is that we're starting to slide, and that could give, once again, the gold, almost seems like one could lead the other, like a dog chasing his tail. And the index is now, for the most part, it's been attributed to the moves in interest rates here with the gold. But with the S&Ps, if we do drop, that'll just really add to a market that's already has a pretty good bid and could really send us moving higher. And so it's almost like a tit for tat thing. And this gold continues to go and strengthen after a dirty weekend. We came off yesterday, and we talked about this yesterday. I said, people were trying to sell, or some people were trying to short this market. And I was saying, be careful on this, because we'd already fallen back the day before. And to me, it looked like it was set up for a sell. But we came rip roaring back. And I was looking for a sell from, look on here in the 1410, and we did get that drop. I came in a little bit early here. I was a little bit impatient here, and we came down here, and I'm glad. I thought, you know what, I'm not in flux or in tune with this market, and fortunately I stayed away from it, yesterday. But people trying to stand in front of it, because my thinking was, okay, it looks like it wants to go in and drop off. And of course, we had silver rip roar back. But when we came back up here, I was telling people, hey, look, they're taking out all these prior highs. We talked about this yesterday. You see right here. So why are you going to try and sell it? Because we talked about this in the roundup. The market is going to have that undertone bid that will, because they know they got, they're not going to let the folks out of jail that are short. And so we rallied up here to 22. We kind of paused a little bit. We punched it up higher, and then we come in on the right here, right as the market opens, and we blast up to 30. We take a quick dip to 25 back up, and then we've been sliding. You're thinking, okay, now this market looks like maybe got a little bit overdone. It's starting to, we already stopped all these people out. We're getting ready to go in and fall back in. And we do. We come to 1420 or just below 1420. You can see that's a very key level here. You can see all the touches just below 20. And then you drop down here like, okay, this market looks like it's maybe a little bit tired. We stopped all those people. Maybe we'll pull back into the lower teens. And then what do? We just turn around and rip roar. I think a lot of this part has to do with, as the S&Ps are starting to continue to sell off, then we started pushing up higher. Obviously also with silver. Look at this. This thing continues to push higher. So it's almost as if one's going to feed on itself. If these S&Ps crack, that'll give gold another reason just to go in and push even higher. So really, like I said, this market looks like it wants to bolt with silver, dragging it up higher in that situation. And certainly the gold hasn't moved based on the dollar. We've talked about that multiple times. I was trading the dollar way more active, towards the end of last year, the first part of the year, and the dollar would not react to the dollar. The gold was not reacting to the dollar. Sometimes you see a few days, maybe a week, that it reacted. What the gold I've mentioned before repeatedly is on interest rates. And, at this point, it doesn't look like we would get no 50 basis point, despite what one of the governors said. But that being said, just the thought that the S&Ps are selling off and gold's already moving higher, it's certainly going to be an area where people may go and look to park their funds. And certainly that's going to provide an additional undertone bid, which can also let this market really zoom higher with what we're already seeing in silver. And the rest of the market, it's been a relatively quiet summer day, although we have seen the Aussie dollar come back towards its highs. Once again, has that bid being a commodity currency, certainly with the moves in the metals, certainly helping the Aussie. But we didn't see much of a reaction here off of the employment data that we saw yesterday. We've seen the dollar yen going in pair back down again. We talked about this 832. We've had that as a bias chart resistance, I think, for the last 3 days. And we came back up here testing it and looked to almost slide again. This is one market that you're going to have to be a little bit careful with, because with the we've talked about this being even as a canary in the coal mine, because remember we were talking about this earlier in the week, I think it was, where we said, God, you would think this thing would be, considering how everything's going right now in the dollar, S&Ps, because I go, we ought to be at least up into the 870s, 880s, maybe a little bit higher at the time. And this market just couldn't push any higher. And we're talking about this being like the canary in the coal mine. And so we do have the opportunity. If we slide in here with risk aversion, we did see the Nikkei get whacked a bit overnight, then we could go in and drop back down. We'll be, probably challenging and probably taking out these lows here at the 676 and probably making a move down here to the 630, which is the 78% of this entire run here. That's one that this is one pair you really want to keep your peepers on if you're looking at equities. Definitely. The peso has paired back. I stepped in here on the 78% here and came in just below the 19. It's kind of holding its own here. Fortunately, the second half of my pair, I was able to get out in the European trading just before 1910. So I was patient, but like I said, it came in, was just a little bit over 1902, I think it was, and then we dropped even below the 19 even, and I was able to add on here, but we're barely hanging on here. Very important support here. You can see that we already had that marked off. So we're looking for this potentially hold. I think they obviously have some people, under some pressure that may have been long. That may be part of it. Maybe we'll see a little bit of a bounce back. The resistance for now is going to come in around that 1906 area. Dollar CAD has rebounded with the fall that we've seen here in the crude oil, but we're below the 50% here, well below at this point. And we had some additional support around the 55.35. If you're looking at the, and let me make sure just so we're clear on that. And I'm looking just here at the U.S. oil CFD. So right here you can see we took out this and actually had some more support here in 35. So we're even below that. But, I would have expected that in light of that, that the dollar CAD would be well over 131. And it's not. But that being said, the dollar CAD has really fought these lows very well. At the beginning of the week, I thought we'd make it down there to 29.95, and we've done very well to go on and defend before getting actually there. Okay, so it's open to move higher, especially if you consider how far it's fallen. But that being said, we've got the catalyst with this lower oil price, and we just can't seem to get anything with this. But once again, something to keep in the back of your mind going forward is this whole thing about the Mnuchin saying the dollar policy is the okay or whatever for now. And that's the whole thing for now. You may not see a change in the next day or two or a couple of weeks, but watch out over the next, month or so. The administration may just find a way to really kick the dollar down. And, I guess on their side, they're going to feel they can do it with some justification. And, we've heard Trump blabbering, about the other currencies, other central banks weakening their currencies. He even said that Draghi ought to be our Federal Reserve governor because he's done such a great job of, knocking the euro down. So that's something you want to keep on, in the back of your head because if you're holding positions we could wake up one day and really get whacked here. And I mean that seriously. We'll keep it relatively tight here. Not a whole lot of movement. Let's go and move into the cross rates. We have gone and seen the euro also continue to weaken. And as I mentioned before, is that the bunds, and we saw the bunds moving higher as far as prices, obviously interest rates moving lower, have continued to weigh on the euro. You can look here, euro versus the Kiwi pushing at these lows. Same thing with the euro Aussie. Euro yen just a little bit better, but not a whole lot more. And of course, we did see cable kind of move up in here. We had our bias chart support from yesterday at 24.79. We had some difficulty on the first go at that 24.79. They did back off, not a whole lot, but they backed off initially about 18 pips, and then they've reasserted themselves. So they're at 24.91 right now. We haven't quite made it to 25, but the cable's so oversold that certainly it could go a little bit higher. We've seen the guppy finally find a little bit of support here at 34, but we don't really get resistance until we get it here to 34.96. We have that as our bias chart resistance. And starting versus the odd, once again, we've come so far. We've talked about that. You can see right here the disparity between the exponential moving averages and the potential that this market, we said it's not necessarily going to go in and bounce right back in 1 day or 2 days, but we can see this market really start to come up a little bit better. We're starting to see a little bit better tone with the starting right now. But of course, obviously, the Aussie is maintaining its strength, being a commodity currency. I think we could probably continue to see that, but we may see a little bit further move in here. So that's going to be warranted here. That's all we've got because, like I said, it's a relatively quiet day to come back into the main screen. as I said, we're seeing the euro trying to push higher in here. But like I said, the moons are a ball and chain on this euro. So even with the dollar sliding, we are trying to push up. But look where we're at, 12.28. I mean, you know, if we come back over here on the euro on the daily, we've got a long ways to go. I mean, you know, this can't even think about talking about any upside unless we were to clear the 1285 area. And look, we're way down here. We're almost 60 pips away. We can't even, we already lost to 1262. So, and certainly with the ECB, with their whole revamp of the outlook for inflation, that certainly has taken its toll. The one market, like I said, keep your peepers on is going to be this, is this dollar yen, because obviously the yen's a safe haven currency, and with what we're seeing here with the S&Ps, I think the S&Ps are open that they can go in and take a slide. I mean, they've already taken a good slide already, but I'm saying we could really start to see something, because once it starts to happen, you're going to hear all kinds of reasons why it happened. Oh, well, you know, one of the reasons is the market was looking for possibly a 50 basis point, and now there's concerns there'll only be 25 basis points, and they may only do that. Oh, by the way, the China news, nothing's been resolved with China, and they're concerned about that. Oh, also, you know, there's also the concern with the Treasury mentioning about that the policy is okay for now. Mnuchin dead. You know, that uncertainty is what worries the market. You'll find all kinds of reasons why, but once again, like I said, the market is pretty well stretched. So could it take a little bit of a breather? And from where they're at, they could take a pretty good breather. But that being said, if you were to look here, you wouldn't think the S&Ps were where they're at. And my point being is, if you look where the S&Ps are at, you would think the dollar yen would at least be, you know, knocking the door at the 110, which is why earlier in the week, and I think last week I was saying it could be the canary in the coal mine. Well, whether it's a canary in the coal mine as far as S&Ps, it is not finding any bids, and the S&Ps will just help accentuate that fall. So this is a pair to keep an eye on, or if you're looking, if you have concerns or you'd like to be shorting the equity market, but you don't want to be involved in that, you could certainly go and take a look at the dollar yen as an opportunity to go in and sell that, as the yen being a safe haven currency, and we can certainly see this market. And we've tried to move higher, we can't. So your risk on this would certainly be tolerable. And if we do break, my guess is we'll make a venture down to 630. But that's all we got. Thanks for joining us here on the FX crossover. And once again, you may want to go on and consider a 10-day trial with ForexAnalytix for $1. Once again, like I said, we have also the chat room, but as well as the analysis across multiple disciplines. Whether it be Elliott wave or harmonics or basic technical or macro. Also have the patterns in play, which Blake, fantastic work on silver. So that being said, like I said, thanks for joining us and have a great trading day.